Have you ever heard of a global gaming giant that's kind of hiding in plain sight right here in India? Well, today we're going to pull back the curtain on a company that is making some serious waves in the world of interactive entertainment. Let's get right into it.
So, how about we start with a little challenge? See if you can guess the company we're talking about. I'm going to give you 3 big hints to help you figure it out.
All right, here's your first clue. This is the only gaming company that's publicly listed on the Indian stock market. And what's really interesting is their business model. They cleverly blend the digital world of online gaming with actual real-world offline experiences.
Okay, hint number 2, and this one might surprise you. You'd think, right, an Indian company would make most of its money in India. Nope. Over 90% of this company's gaming revenue comes from international markets, like the US and the UK. We are talking about a true global player.
And for the final clue, get this. They have over 25 active IP franchises. Now, this isn't just a couple of hit mobile games. We're talking about a super diverse portfolio, with everything from casual phone games to those premium, high-end titles for PC and consoles.
So, did you figure it out? The company is Nazara Technologies. Now that the cat's out of the bag, let's dive into the really juicy part, their financial story. You know, when you look at Nazara's recent performance, it's really a tale of two very different numbers. It's a story of absolutely incredible growth on one side, and some pretty serious pressure on the other. And the contrast is what's crucial here. The good news? It's fantastic. In Q2, their revenue shot up by a massive 65% year over year, mostly thanks to a huge surge in mobile gaming. But, and this is a big but, that growth came at a pretty steep price, and it actually led to an operating loss.
This chart really tells you everything you need to know. It's the core issue in a nutshell. While that revenue grew by an impressive 65%, their expenses just soared by 134%. I mean, when your costs are growing more than twice as fast as your income, that's a major red flag.
Now here's a curious little detail from their financial report. There's a line item called Other Income, and it saw a mind-boggling 726% increase. But get this, even that massive jump wasn't enough to cover the rising costs and actually turn a profit.
So what's the bottom line here? Well, despite that impressive revenue growth, the company's net profit was still in the red. This struggle to turn all that money coming in into actual profit is a huge warning sign for any business, which naturally brings us to the key risks for investors.
So, if you're looking at Nazara as a potential investment, what are the key red flags you really need to be aware of? Let's break down the major risks.
There are 2 big things to watch here. First, there's been some choppiness in who holds the promoter's shares. And second, a really significant chunk of the promoter's shares, we're talking around 56% as of September 2023, were pledged. So what on earth does that mean?
Pledging shares is basically when the owners or promoters of a company use their own stock as collateral to get a loan. Think of it like putting your house up to get a mortgage. Now, it happens all the time, but when you see a really high percentage of pledged shares, it can be a signal of financial stress or that they really need cash.
And yeah, a number like 56%, that definitely points to some significant leverage pressure on the promoters. It's a key metric that any potential investors should be tracking very closely, because it can absolutely impact the company's stability.
So you take all of this, the explosive growth, the soaring costs, and these investor risks, and it all leads us to the fundamental question that Nazara is facing as it looks toward the future. And it all boils down to this one thing. Will Nazara's aggressive high-growth strategy ultimately pay off, or is it going to continue to come at the expense of actually being profitable? That is the multi-million-dollar question at the heart of India's only listed gaming company.